Did you miss us? What up, everybody? Good morning. We're back. The morning show. Back in action. Hope you all had a good week. We had a great week in Chicago. Well, some of us were in California and Chicago. I wasn't so lucky, but nonetheless, great times were had last week for us. Great times were had for the market. I hope great times were had for you. But we're back. Let's get the show on the road here. Spencer, JC, Steve, Alfonso. We have Perth Tolle on the show today, so we'll talk investing in freedom. That's always a fun time. And we'll recap what we missed or didn't miss. It's not like we weren't paying attention. We were paying attention. We just weren't here with y'all. So good to see you all in the chat. We're back. We're excited. Let's go.
Whoa, the boys are back in town. Boys are back in town. Little singing?
Back. Yeah, man.
You like that? We are back, baby. Did you miss us? You miss us? A little bit. We miss you guys too. Not gonna lie.
What did you guys think of last week?
Wow, what a week. You know, I was telling Strazza on Friday. It was the last day of our portfolio accelerator in Chicago. And this was after 2-3 days in Chicago and another 3 days in California before that. You know, a lot of laughs, a lot of screaming, a lot of loud music, right? And Friday, I felt pretty good on Friday. I'm not going to lie.
No, you
not going to lie. I woke up this morning hurting a little bit, though.
I don't
hurting
believe
a little bit.
Yeah, I feel just as tired. I got home late last night and then golfed yesterday morning at 7:30 a.m. And then I had to watch football all day. So I'm still catching up.
Yeah. Yeah. I don't get to take naps or sleep in or anything like that because I don't know if you know how many kids I have.
Well, I don't.
Yeah. You have kids now. Do you find it like harder to hang like during a week like last week? Is it harder for you to hang like or you're still there? Like
no, I mean I hang just fine, but like I Irish exit earlier. I pace myself more.
Yeah. No, okay.
You know what I'm saying? Like I've gotten, because one time in India, this was like in 2000, and I'll tell you exactly what it was. It was when I found out my wife was pregnant. So this was 2015, right? No, sorry, 2019. 2019, I get a text message in India. I was with Sean. And my body at the end of that trip was just shutting down. Like I had been gone for so long and hit it so hard and traveling all over the place. I don't know how many, I was in so many countries. My body was just like, stop. Just whatever it is that you keep doing, just don't do any more of that. And like, it was like my body telling me like, dude, you got to like chill out. And like, I wasn't even doing anything bad. Like I don't even do drugs or anything. It was just like, just pushing, waking up early all day, drinking at night, wake up early, right? Like it's a lot. And then, over the years I've learned, you want to pace yourself a little bit more. I knew it was going to be a long week because we got California, everybody was there. Everybody was at Future Proof. If you have any questions as to whether this is the real deal or not, I don't know anybody who wasn't there. And like, if you weren't there, and it wasn't even for us. We're not even financial advisors. They're just our friends.
We already knew. I'm going to go to the one. They're doing a shindig in Miami now in March.
They are. I'm doing a panel, me and Pitbull, about technical analysis. So we're going to do global markets with Mr. Worldwide, right? I figured that would be appropriate.
That's great.
I know. That'd be dope, right?
Can't wait to see that.
Yeah, it's gonna be sick. I don't know if that's true or not, but I did tell Josh that we should do that, and he laughed and said, "I'll work on it." So probably not, but maybe. I'm saying there's a chance. On our conference conference is a strong word. It was especially after the conference that we were at in California. It was a meeting of the month.
It was a summit.
Summit,
a gathering,
round table, more of a round table, more private. It was the exact opposite of what was going down over in financial advisor land in Orange County.
Which is by design. That's by design, right?
Which is by design. Over there, they're looking to party. They're looking to put money aside, set it and forget it. Everybody's there, 4,500 people, which is wild. There's too many people there. And ours is more active management, idea flow, small, intimate. You got to apply to be there unless you work with us. I thought that was awesome. Ours was better. Easy to say that. Different. So not really comparable. Apples and oranges, right? Would you agree with that?
As awesome as Huntington Beach is every year for Future Proof, I had more fun in Chicago. So I thought our thing was even better.
Strazza was in Chicago for the first time ever. What did you think?
Actually, Steve, I want to know what is your take on the Midwest, the American Midwest?
I'll go back there. You could send me back there. I'll go back there.
What was your favorite part of Chicago?
Kingston Mines, I thought, was a really fun time. Just great music. Some blues that I hadn't really heard in a long time. Hanging out with the team, and then we brought some of the analyst team out for some Wagyu and taught Sam how to use chopsticks. We went to Nobu Rooftop when everybody left on Friday. That was pretty fun too. That was really nice. So Chicago's just great. I mean, the weather, it's a little bit more spread out just in terms of like the buildings are not on top of each other. So like some sunlight can creep in when you're walking down the streets.
They got a river in the middle of the city.
It's fantastic. There's water. You can see the water very easily. You don't have to be in like on the right street like you do in Manhattan.
Yeah, no, it was fantastic. And so, guys, just so you can get full perspective on Chicago, we're going to send you there in early February, and you can let us know if you're still.
No, I'm a summer in Chicago guy. Yeah,
September. That's the fall.
Fun.
I'll take the Wrigley. We rented out one of the rooftops in right field. It was 10 times better than I thought it was going to be. I've always wanted to do this. I've been watching those right field things on TV like my whole life. I've always wanted to do it. Finally, like I can make the decisions around here. So I'm like, this is what we're doing. It was fantastic. Tell me it wasn't.
I'm not a big baseball person. I don't need baseball in my life. That was so fun. That's if I'm gonna watch a baseball game, I want to watch it like that. Also, I got to tell a story on behalf of Alfonso. He's sitting in the bleachers, and they show the players on the big screen, when they're up to bat. They put up this guy, I forget his name, something Perez, and Alfonso's like, played baseball with him, went to school with him back in Venezuela. He hadn't seen him in a while.
Isn't that hilarious, dude? He knew that he was in the bigs, but so we were watching Alfonso's classmate in Wrigley Field, which I thought was very cool. Very, very cool. And listen, being a baseball player from Miami, I can tell you just how hard it is to play pro ball. So good for him. Also, the brats. Can we talk about the bratwursts? Oh, with extra onions. I had so many. I felt disgusted with myself.
Yeah,
disgusting.
Yeah.
I was ashamed. I'm on a body cleanse after those bratwursts. That put me over the top.
And
can we get to the market, please? Because we got a lot to talk about. Can we?
Brian Harris in the chat said lines went up last week. I think we should talk about it.
I think we should. Shall we?
Sure.
Please.
All right, ladies and gentlemen, we have the Dow futures this morning doing absolutely nothing. 42,500, roughly, just under that. New all-time highs for the Dow Jones Industrial Average, world's most important stock market index. New all-time highs. S&P 500 futures, also new all-time highs. Some would argue that's the most important one. Either way, both highest levels in human history. 57.70 up 20 basis points this morning. 10 handles for S&P futures. NASDAQ 100 futures leading the way this morning, up almost 1/3%, back above 20,000. When we left, we were below 20,000. Now back above 20. 30-year futures, 30-year bond futures down 0.5%. That's just under 125. Crude oil futures are flat, back to 71. Big move, bouncing back hard for that crude oil. Copper 432, continuing to hang on very well, down 1/3% this morning. Gold flat, 26.50, also hitting new all-time highs. Silver down 1.5%, still above 31 though, with the volatility index hovering just around 16. We've got Bitcoin flat this morning, 63,300, creeping higher while we were away. Ethereum 26.50, up 2.5% on the day. Solana down 1%, 143. Binance 593, up 1% on the day. Total crypto market cap. Spencer Israel, are you ready for this?
I'm ready.
2.17 trillion. How about that?
I like that.
But
everybody like that.
Still about 57.5% for Bitcoin dominance. So with crypto market cap inching higher, you're still seeing that Bitcoin dominance coming in. What stands out from the futures, and let me broaden it out What stands out from the last week since we last did this this little shindig? Welcome back. Good to be back, guys. Good to be back.
Energy digging in. Really awesome. How about Nat Gas? How about that Nat Gas trade?
Yeah, that worked out nicely, huh?
Are things turning for commodities? You know, we've been talking about how
we can include natural gas. It's not natural gas is like its own beast.
I know, but look, crude oil dug in at the lower bounds of its range, rebounded higher, and nat gas is making a move with it. Not saying you see it every time, but that's been going on for the last week or two now.
Yeah, I mean, I think it's just more of it. You're right. Energy dug in, but think about it like this.
All of it.
It's not just energy digging in. It's every single sector, industry group, and index. When they have to dig in, they do, don't they? In this case, the latest example is energy, but we could say the same thing about semiconductors, technology, industrials, financials. I mean, when they've had to dig in, don't they?
We talk about how sector rotation is the lifeblood of a bull market. Isn't holding support another big characteristic of a bull market like that? I think that's really what you're saying, right? They're not breaking trend. They are performing when and where they need to.
Can we go to slide 3, please, Spencer Israel, my good man?
Because things were on the rocks. Last week was huge. Some big follow-throughs. So if we think about, like, let's just go back. Let's just rewind. So last week we had the Fed, but late the week before we had the Timoreos article and the big move in the Nick Timoreos in the Wall Street Journal put out a note basically saying you're going to get a spicy double, people, get ready.
Is that the guy they call the Fed Whisperer?
Fed Whisperer. Yeah, he whispered.
How I know?
Because you read the paper?
No.
Okay.
That was just a wild guess. I've never heard of this man.
He whispered on like Wednesday, not of last week, the week before.
Why can't he scream? Why does he have to whisper? Why can't he just be louder? I don't understand. It's like a secret.
I don't think he really talks. I think he just writes, you know?
All right.
Yeah. So,
all right. So that's valid.
The Fed funds futures market started to price in a big double cut, right? We got that price in late 2 weeks ago. Then we got follow through, a little mixed action. The Fed came in. It looked like they were reversing the Fed. Remember on Wednesday of last week? And then Thursday, big gap up, new all-time highs. Right? You had a little like shake. Looks like the Bears got to shoot their shot, and then beep, and then go time again this week. I mean, this just looks fantastic. The bulls are back in control across all time frames. That's what you want in a bull market. I think this corrective wave is past us, and it's time for another leg up. Who leads the leg up, I think, is really the big question. That's what we should be talking about.
Can we go to slide 3 and 4 here? New slide 4, but yeah, 3 and 4.
Do me some breath. Talk to me about this breath.
Let's talk about what the market is doing. So I am not like the biggest advocate of the net new highs list. You guys hear me. I don't want to say criticizing this particular data set, but I like to put things in perspective.
I don't know why you don't like it, though. It's pretty standard. I don't like. I mean, why do you hate the net new highs? No, I mean,
so much that I hate it. It's about putting things in perspective.
Okay.
What you're doing is if you have a number and you subtract the number 0 from that number,
yeah, sure,
you're just going to get the number. So if we're looking at the net new highs list, so that means that we're taking the new 52-week highs minus the new 52-week lows. When you're in an environment where there aren't any new 52-week lows, number one. Number two, the majority of stocks are nowhere near new 52-week lows because we're 2 years into a bull market, then it's not that informative. And the reason I bring this up is because the reason I bring this up is because what I like to do is I like to count the new highs and then separately go and count the new lows. Second one of those doesn't take very long these days. The point is, there aren't even that many stocks making new highs. Like, we're still coming out of this corrective wave that Strazza was just talking about. The new highs list isn't even that long yet. Despite that, right? In other words, the new highs list has been much longer at many times throughout the year. The fact that there just aren't any new lows is what's driving the fact that the net new highs is hitting the highest levels this entire cycle. It's not even the new highs. It's the fact that there aren't any new lows.
Yeah, but that's a good thing. No, I hear you. Yeah.
But I want to reiterate what is it that's driving this data set. Can you go to the new lows list, please, Spencer? So this is the big one. It's not so much the new highs. It's the lack of new lows. And I say it all the time. Mathematically, you cannot have a bear market or a correction of any kind without the prices of stocks falling. We know that. We have the data. It's just math. So stocks falling is a prerequisite for a correction. So if we know that, then let's count how many stocks are making new lows. And we're not going to look at the new 52-week lows list because we know there ain't nothing happening there, and it's not going to happen anytime soon. You're going to see a spike in the new 1-month lows, 3-month lows, 6-month lows before you ultimately get it and see it in the new 52-week lows list. So this, we're looking at 1-month lows in S&P 500 large caps, S&P 400 mid caps, S&P 600 small caps. And, like we talk about, we want to see the most amount of new lows that we've seen in a year, 18 months-ish, right? That's that level right there in Q1. Throw the chart back up, Spencer, please. Can you throw the chart up? I don't know why you're taking it away. There it is. So there's that early 2023 spike in the new lows. We are nowhere near those levels. So for us to have any kind of correction or bear market, we're looking at it for an expansion of stocks making new lows, the most amount of new lows that we've seen in quite some time. I'd be focused on the 1-month lows list, even the 3-month lows list. After that, it's going to take a while. How do we feel about that, Strazza?
I like it. I also, where my head is at with this data set right now, Grant was asking, is that going to be the cycle high for new highs? I would be shocked if it is, because
you didn't get it. The cycle high for new highs was months ago.
No. Net new highs.
Yeah, who cares? It doesn't matter.
Fine. But it's not going to be, because look at the NASDAQ 100 and look at all the NASDAQ 100 names. They're not there yet. So you're going to get a higher reading.
I think you probably will. But the bottom line is there aren't even that many new highs. It's just a lack of new lows that is really the main driver here. Throw up slide 4 and 5 here, Spencer, please. So we're looking at the advanced decline line. Now, this line does not take into account where stocks are relative to their new 52-week highs or new 52-week lows, which is why I think that this is an interesting data set to look at currently, because it sort of eliminates the fact that stocks are so far from new 52-week lows. This simply measures, it's a cumulative accounting of the number of stocks on the New York Stock Exchange going up minus the number of stocks on the New York Stock Exchange going down. That's it. And then the very next day, you do the same thing. You take the ones you take the ones that are going up, you subtract the ones that are going down, and you add that to the prior number. That's it. It's just a cumulative line. And we are at the highest levels ever.
Wow.
So the advanced decline line on the world's most important exchange, making new all-time highs. And then look at the Dow Jones Industrial Average, most important stock market index in the world. Next chart, please, Spencer, is also making new all-time highs. And if you disagree with me, and you're one of these, S&P 500 type of people, also making new all-time highs, by the way. Probably not a coincidence.
Yeah, you want to see that confirmation from the AD line, but it's not the end of the world, right?
You want to see confirmation from the AD line. What you're looking for is a divergence. You're looking for new highs in the indexes, the advanced decline line not making new highs. Those sorts of divergences tend to appear at some key turning points. And then finally, and then I'll Straz, I want to hear your thoughts. Finally, here's slide 6, please. This is the defensive rotation that I am being told is happening in this market. The defensive rotation, they tell me, and then I go and actually take the time to look, right? Because I'm that guy, right? I'm the guy that you could tell something to, and I'm just not going to believe you. I'm going to go and look for myself. And as it turns out, there is not this defensive rotation is a fugazi. It's a fugazi rotation. I'm looking at consumer staples relative to the S&P 500 on an equally weighted basis, hitting the lowest levels in the history of human civilization. Never, ever, ever in the history of the stock market have consumer staples, the most defensive of sectors, been lower relative to the S&P 500. And this is on an equally weighted basis. So none of this like market cap weighted stuff. Equally weighted. So this is the defensive rotation.
This relationship has gotten blasted over the course of the last 2 weeks after there was a lot of strength from staples. And look at you using the equal weight ratios when you want to. Look at that. Wow. All right. No cap weight ratio here today.
You want me to throw it up? It sucks too.
We're using the equal weight. I noticed that that's a change.
It's not a change, Strazza. You're just not paying attention. You see,
No,
I look at market cap weighted indexes. I look at equally weighted indexes. I look at small cap indexes.
No, I
I
think
look
this
at
is
mid cap indexes. I look at market cap weighted indexes relative to market cap weighted averages. I look at the equally weighted indexes versus the equal, right? Like
I think you're doing the right thing here. I'm not
equal
saying anything.
opportunist.
This is
Equal
great.
opportunist.
This is great. This is great.
We also do live in a market cap weighted world, Phil. Phil is absolutely right. I couldn't agree more. But I wanted to really look at a broad measure of defensive rotation, just to show everybody that they're lying to you. They're just lying to you, or worse. In my opinion, I think you're a better person if you're just lying to people. The worst people haven't even bothered to look. They haven't even. Those are the worst humans. And then just think about this. Think about this. Why is it that this guy has been wrong for 2 years and just can't admit, oh, guys, I've been wrong. I got it wrong. It is a bull market after all. It wasn't a bear market rally. I just suck at this, and I'm just not very good at identifying trend identification. Why must this person wake up every morning making up blatant lies as to this massive, credit crisis that's coming and this event that's going to happen and everything's going to come down and you can't own stocks and, how funny it is when stocks fall? Like, why can't that guy, is it depression? Is it that the ego is just too fragile? Like, what a fucking loser you are. Like, if you're listening to this, you suck. Go do something else. And the reason I say him and he is because it's always a guy, right? Like, those losers, they're always men. Isn't that true? Like, you don't have angry loser perma-bear women, right? Shout out to the ladies out there. It's always a man.
I'm not gonna.
I'll just add that this chart is good. No cap.
Hey, now using Gen Z words. I see you, dog. I see you. Did you learn that from Sam?
But it has no cap, right? The market cap. Right?
Nope. Can we go to slide 7? Sorry, Straz. I know that I was going to give you a shot. Slide 7 here.
And then we have Kenny here.
And then we have Kenny. So this is a consumer discretionary. I am being told, correct me if I'm wrong, Strazza, that this is a consumer-based economy. Is that right?
It is very true. Yep. Nailed it.
And the consumer discretionary sector on a market cap weighted basis, because we live in a market cap weighted world, right? Making new multi-year highs. And by the way, still not even at those former highs.
Wow.
We got to get there, right? Wow. That's going to act like a magnet, right?
Wow. Tesla, Amazon, and Home Depot must be doing great.
Not really, actually. Oh. Not really. That's why they're still below the prior cycle's highs, you see. That's the whole thing. You see Amazon still below the prior cycle's highs. Tesla had a 2/3 retracement of that entire rally. Home Depot just didn't get the memo that home construction is off the charts, right? So the answer is no. They haven't been doing that great. But if this is a bull market and we're reversing engineering what a bull market looks like, then consumer discretionary is not going to be crashing, is it? That would be weird.
The housing related names, it's been the best trade. It's been the best trade past couple of weeks since the whisper, all the housing stuff, Rocket Mortgage, the Zillow Group, anything building materials related, the residential construction companies, up. There's some squeezy stuff going on there too.
All right, why don't we get Kenny here, please?
Mm-hmm.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
I just kept it 100. Ooh.
My friends, welcome back.
Jefferson.
Thank you, Kenny. We missed you.
It feels like a month, right? Yeah. Lots have happened. What's going on? How's the trip?
Dude, it is a bull market. Listen, you and me, we got a few cycles under our belts. We've seen a few bull markets over the years. Like, I don't know, man. I'm going to some great parties these days. We're getting a limo on Thursday. We're getting a limousine on Thursday to go to a random birthday party. Like, that shit don't happen in bear markets. There were there were like tens on roller skates skating through a financial conference early last week. I don't know. I tweeted it out because I'm like, this don't happen in bear markets.
Didn't that remind you of that like Austin Powers Gold member scene where they're in the club and the girls are on like
yeah, a little bit. Now that you mention it, man, if
like
they
I
would have
missed
been
the
dressed in
time.
gold, that's how you know sentiment's not frothy in gold yet, because they would have been dressed in gold.
That's funny.
So anyway, those are just some anecdotal things that I saw. You know, not bear market stuff. What about yourself?
Were they back to the inline, the old school skates or the inlines? Because I like the old school.
No, the quads.
4 wheels.
They were wearing quads.
Nice, nice short skirt, the short with the outline on the shorts too.
I was looking.
No, okay.
I wasn't looking. I'm a married man. I didn't see, but I was told how very attractive they were.
I was told there were ladies there. Yes.
But they were. I mean, listen, there was definitely bull market behavior. Strazza and I had a dinner. There was champagne. There was caviar. There was multiple dessert wines.
Yeah.
And
It's happening in bear markets.
And the Jets and Giants both won on the same weekend. So we're things are going crazy right now.
Shout out Jersey. Shout out.
New York sports, right? We had a great week. Jets, Giants, Yankees, Mets. We're all looking pretty good. I don't know what's going on, but I'm in a pretty good mood.
Yeah,
too,
give it a
so.
few weeks.
Yeah,
so Kenny, those are my observations. What have been yours over the last week and a half or so?
My observations, again, my conversation is a little unique from most people. You know, again, I stay focused on what I could, what I can grab for the day. I'm done trying to figure out, especially because I'm still scarred from the yen carry disaster. Did that just go away? Like, that was some big news that night where I was getting my ass kicked shorting volatility, and now it's just gone. And now we had one of the better Septembers. So again, it's a perpetual bull market, and there's no fighting it. But as far as I'm concerned, every day is exciting. So if you're looking to make 15-20% over a year, we find that on a daily basis. Just some random stock this morning, some biotech BDTX. Again, it's ripping, and next thing you know, I love shorting these stocks because they always go back down to where they're coming from. If you see my screen, I don't know if you have my screen up, but that's what I'm saying. It's like when we come in, I love the conversations you're having, and you're always perpetually bullish also. And it really is.
I am not. That's just how I am in bull markets.
And you always find something where there is bullishness. Yeah, I mean, it's not too hard right now. I mean, that's the thing. But when it comes to me and my crew, we're so isolated now on what happens on a daily basis, and it's fantastic. That's what's the greatest part about it. Originally when I was more of a bull or a long-term investor, we would day trade, take 30% of those profits, and then put it into the Qs, which is still pretty much the trade. I mean, you cannot beat the Qs. Every dip's being bought, and the strength is phenomenal. But for us, earnings season is about 2 weeks away. We're going to have so much to do. And I think, again, every year, every quarter, it's the most important earnings season ever, right? That's what they say, right? So here you go. Take a look at this. Here's my screen right now. This is as simple as it gets.
Wait, Kenny. Oh, never mind. We got it. Sorry.
Yeah. Some random biotech stock. I know this thing was was on our radar a couple of weeks ago. And then, again, I'm not a part of the pop usually, but once the pop starts to dissipate, this is your VWAP. That's prior day VWAP. And when stocks go through today's VWAP and back below prior, 9 times out of 10, you get a little follow through move. So, again, this was an easy shorted stock. Don't know much about it. That's the best part about it. Some of these stocks that we talk about, 2 days later, I don't even remember we traded them because it's these random biotechs. It's a therapeutics. It's a biotechnology. They have these pops. They have these drops. And every once in a while, they come back. And that's when they become exciting because, when they do come back, like this Summit trade, Summit came back and we've been trading it for 3 weeks now on fire. So you just don't know which ones are going to come and go or the ones that come and stay. But when they come back, that tells you that there's real buying, and then we stay focused on those.
Give us another name. What's on the move this morning? Any big movers?
Another weird one also, which I'm dying to short, but it looks like it keeps going up. It's a real estate investment trust, which is this crazy volume. Wheeler Real Investment. I haven't even looked into it yet, but WHLR, for you day trading maniacs out there, this is where you want to go. This thing pops and drops. It gets halted a couple of times because of the lack of volume, but Very, very strange action, but I'm going to watch this one and I'm going to wait
This
to
is a
see.
tiny. This is a tiny less than nothing, but it's traded a ton of volume. But
Yeah,
yeah,
I don't know where these come from. It cannot be a typical real estate or a typical REIT, but I'm gonna pound this thing inevitably when it rolls over. But like I said, earnings is coming. You know, we're gonna be talking about Wells Fargo, JP Morgan, Goldman Sachs in about 2 weeks. You know,
2
I think
weeks, right?
October 10th, October 11th. And then we're going to start doing those night sessions that I always talk about. Because originally, you know, tech reports on Thursday nights, you always have these big numbers. So we would get together on Thursday nights and plan our attack. It was like Thursday night earnings, and you had these new invention called weekly options, which is not new anymore, but these 0-date options. That's why once you get into the groove of what you're doing, you stick with the UVXY and the QQQ and a couple of weird biotech stocks and then earnings reports. The plate is just full of opportunity, and that's what we do.
Give me one more, Kenny. How about something with a little market cap?
I'm still watching this rocket stock. You know, the ASTS is still on the radar. It does not want to die. So again, I'm looking for it to get back over this 27 area today, and it's been a pretty sweet trader. You know, again, short and long, and then again, I'm just staying focused. You know, again,
where I think this one goes, the space stock?
Yeah, to the moon.
But
more importantly, if you guys are looking for some new music, I went to 3 concerts over the last 10 days. Rainbow Kitten Surprise, check them out. An Airborne Toxic Event. If you haven't heard of these guys,
hold on. Let's get these names right.
I love Airborne Toxic Event, dude. They're so good.
Rainbow Kitchen Supplies.
Rainbow Kitten Surprise, phenomenal. They just sold out Radio City. One of the best live acts I've ever seen. And I'm telling you, I've seen thousands of concerts.
And what was the other one?
Airborne Toxic Event. They just released a new album. They're kind of like, it's like I got my Ramones shirt on from last night. They're kind of like the Smiths, The Cure meet the Ramones. So it's pretty awesome.
Wait, Kenny, did you get to see Jane's Addiction?
I got to see Jane's Addiction the night before.
But you saw the night. You saw the night before the.
Yes, I could say I was at the last Jane's Addiction concert ever. So
wow.
And to me, it sounded great. My friend was like, "Oh my God, he's so screwed up." I'm like, "Is he?" I'm just having a good time with the music. But it turns out they were.
I want to give a shout out while Kenny's still here. I want to give a shout out to Third Eye Blind. Band from the '90s. You know, it wasn't the Method Man and Redman that we had last year, which was epic. So it was Third Eye Blind. The guitarist at Third Eye Blind, fantastic, dude. This guy was ripping it. I was actually very, very impressed with Third Eye Blind. I was kind of just gonna be like, whatever, it's better than nothing. But
give me the Third Eye. What's their one hit? What's their one? I can't think of the Third Eye.
Never Let You Go. I think it's Never Let You Go. Yeah. All right.
Sing it. Yes, sing it. I'm thinking of Blind Melon right now. That's why I got Blind Melon.
You'll know 3 songs. You'll recognize 3 songs.
Right. I probably know.
How's it gonna be?
There you go.
See you, Kenny.
All right. See you later. I'm gonna go look at roll.
Oh boy.
My kids and I started a band. I bought my daughter a ukulele. So she thinks it's just a pink guitar, but it's really a ukulele because she's 4. And we named our band, or my kids named our band, we're the Ice Cream Sandwiches.
Good name.
Shout out to the Ice Cream Sandwiches.
Good name.
New band.
All right.
Daddy on the percussion.
Better buy her a ukulele. I guess ukulele is better than drums, right?
Well, the guitar is just too big for her little 4-year-old fingers.
Right.
So Brett Schaffer suggested I'd get her a ukulele.
All right. Should we bring on our today's featured guest?
Please.
Perth Tolle?
Please.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Perth.
Hey, how's it going?
What's up?
What's up?
How was California?
Oh my God. So much fun.
It's aggressive.
Yeah.
There were a lot of people there.
Yeah. I love the comment section here. Somebody said Third Eye Blind is some beta ass music.
Well, Redman and Method Man, particularly Redman, had some choice words at last year's event, which had the corporates go in a different direction.
That's why we went beta.
That's
that was too alpha.
It was too much alpha last year. It was a little out of control for a financial advisor conference. No further comments, but yes. I was standing next to Blair last year watching the game, and watching the band and or Method Man and Redman, and she goes, "Did he just say that?" I think we just got canceled. Perth, I just want to give you a big shout out. Congratulations on all the success with the Freedom ETF. Can you throw up the slide 8, please, Spencer? Because emerging market ETFs do not look like this. As somebody who looks at a lot of emerging markets, countries, ETFs, and everything, they don't look like this, Perth. So big ups to you. Shout out.
Well,
Thank
it's
you.
the prior cycle highs, right? The other ones aren't back there yet, Perth.
Yeah, no, I think there's some autocracy drag in the other ones that might be keeping it down.
Oh, I like that. Throw up the performance chart now.
Perth, you're not even at $1 billion. Are you even trying? I mean, what are you doing?
I know.
Cycle to date.
I'm trying.
We're almost there. I'm totally just kidding. It's very, very impressive. Very
No,
impressive.
that's completely fair. I've actually been out of media for a while, for like 6 months. I think you guys asked me to go on about a month ago, and I was like, nope, I'm not coming back until like a month later. So.
And why the media?
I had something I was engulfed in something I had to finish. So I'm done now. And
you were engulfed. I like
yeah.
that. I like what you're doing.
Was it a bullish engulfing or bearish?
Definitely bullish engulfing.
Had to be bullish.
Yeah, it was bullish.
Nice.
The trend is your friend. No, but there were freedom stickers everywhere and freedom ads everywhere at Future Proof.
Oh, those guys are great. Yeah. I was supposed to, those are supposed to be in the guest bags, but
yeah,
they got there late and they made it work. And I'm so thankful for that. So
well, they put them right at the main table.
I know, next to Josh's book. I'm so honored.
I put one on my laptop, so I'm representing you now.
Thank you. That's amazing. I have the same thing.
Yes. Big fans.
Let me ask you this, Perth, before we get into the fund and everything like that. So Future Proof, you had over 4,000 people, a lot of financial advisors there. Like someone like yourself who's managing an ETF, very successful one. Most ETFs are not. Yours is sort of like an outlier. So again, kudos to you. Like, what is your mindset when you go to a conference like this? Are you just like, oh, I'm just here to party? Or do you go in there like with a particular mission?
Yeah, so this is a conference where we have a lot of early investors and early supporters because Josh was one of our very earliest supporters before we had a fund. So it was, I met Josh in 2017 or 16, I believe. And the fund was launched in 2019. So the index was around since 2017. So a lot of my followers originally on Twitter, because, I met Josh, I got on a plane. There was like bad Wi-Fi on the plane or something. After I deplaned, went back on Twitter and had like 100 more followers than I had before I got on the plane because Josh had tweeted about me. So a lot of my early followers came from Josh, people that were like in the fund on day one. So my goal in going to this conference is really ever since the first year, and this is the third year I've gone, it's just to kind of say hello and to see our very earliest investors and earliest supporters.
All right, you could say it. So you're there to party. You're like us.
Pretty much.
Yeah, that's cool. Nothing wrong with that.
Okay.
Because listen, you're like us. You're going to run into customers and investors and friends and future investors and future clients. Like, that going in.
Yeah.
So we're just there hanging out,
Pretty much,
right?
yeah.
Yeah, all right.
It's
That's
the
cool.
best. It's like the best conference for that.
Yeah, it is good. It is good. That was a lot of fun. All right, let's get into the fund. Strazza, what you were doing? You had something to look up. You had a little homework over the weekend on the Freedom.
No,
right?
I bumped into Perth. I told her we'd run some performance charts. So throw up the cycle to date. And then there's a question in the chat. So we're just comparing. Is this your peer group? Did we do okay? We're comparing Freedom to the other emerging market ETFs.
Yes.
It's really on trend to ex-China out of things. So that's in there. And then we have frontier markets, which I don't know what's gone on with that fund recently, but it looks like it got acquired. Just like
no, they're closing that down. So this was an iShares FM, which you have in the orange line here. This is iShares Frontier Markets. It was the only real frontier market ETF out there. And so the rumor is, and I don't know why they're closing it down. It had 400 million in it.
Wow.
Now it's about 200 million because I think of the shutdown. It's going to just, I guess, go from there. And it's going to take them about, they're expecting it to take like a year or more to unwind. And what they're saying happened is that Nigeria, because of their currency situation, they didn't have like liquidity. And so they had to shut the fund down. I think that, I don't know if I believe all of that. Like, I think it might've just been too expensive for them to run because frontier markets are so illiquid and so expensive to make markets in. And so that's why it's so difficult. No one else has done it. And iShares was the only one that kind of had the, the scale and the resources to do it. I wouldn't have shut down a $400 million fund, but
that's pretty incredible. You would think they could just X Nigeria out.
Right. And it wasn't active strategies that, it wasn't even passive, index tracking only. So they could have just X'd out. That's why I was like, I don't know if that's the real reason.
So do you want to talk about that a little bit? The people in the chat probably have no idea what you mean. It's not easy to actually go out and buy these stocks on local exchanges in these countries. So, these funds, the one that you're running as well, are a lot more difficult than running a large cap, sector spider here in the United States, right?
Yes, much more difficult, much more expensive. Emerging markets are like, as you guys know, like China, Russia, Saudi Arabia, Egypt, Turkey, Qatar, UAE. Those are the autocracies. And then you have the freer emerging markets like Taiwan, South Korea, Chile, Poland. Yeah. So, there's a lot of, first of all, dichotomy in the freedom levels in these countries. And, looking at these top three lines, you can see that autocracy drag in EMX. Well, EEM is the benchmark, I would say, following the MSCI Emerging Markets Index. Yep. EMXC, you have there in the purple, that's the Emerging Markets X China. And then, of course, FRDM is us, the Freedom 100. So the EMXC is doing better because it doesn't have China, but it still had Russia, and it's still just market cap weighted. It still has Saudi Arabia, Egypt, Qatar, Turkey, UAE. Right. The universe is just rife with autocracies. And then frontier markets is the even smaller than emerging market countries. So Nigeria, Kuwait, Vietnam, some very high potential countries. I love the emerging and the frontier markets because the low base that they're coming from. And especially the freedom premium in these countries should be much higher because there is a lot of divergence in freedom levels between the countries in the universes. But yeah, I think that the reason why we have, a freedom weighted strategy is that these places are the ones where, we expect to find the best growth stories the next decade. As with indexes, you just want those big growth stories. What's going to be the next Apple, Google, NVIDIA. And we think that those are more likely to come from and be captured in the freer countries.
So you're almost saying it like it's all relative. You're calling them freer, but not necessarily free. Are there any like true capitalist countries in the emerging market space? Like who would be the most capitalist?
Chile.
Yeah, Chile is one of them. So Chile is always in our top 4.
See that? Not bad, Perth, huh?
That's not a lot of people know that, JC. Actually, it has like less than 1% weight in the benchmark.
I drink a lot of Chilean wine.
So there's less than 1%
that explains.
in EM, and I see freedom's coming in around 17%. Chile, it's second largest.
Yeah. Wow. So Chile is one that. Okay, so here you see Taiwan is the top country, and that is due to both freedom weighting target weight at the beginning of the year and also just market movement throughout the year. So that's very high. That's going to get rebalanced back down at the next rebalance.
Are you making like active calls like, hey, it's an AI fueled bull market. Let's own more Taiwan semi? Because you're pretty heavy into it.
We are freedom weighting on the country level. It's 100% freedom weighted. And again, that's based on third-party freedom scores. So we're looking at both, and you mentioned who's the most capitalistic. So we are looking at both personal and economic freedom.
Got it.
Economic freedom being the capitalism part, and then personal freedom being things like freedom of speech, media expression, lack of terrorism, torture, trafficking, and so forth.
And
so
yeah, go ahead. Sorry.
Yeah, so both of those things added together make up the Human Freedom Index and Dataset by the Cato Institute and the Fraser Institute, and that's what we use. So they have 83 different variables on all these freedoms, and we take the composite country score as the main input into our country weighting algorithm. So on the country level, it is 100% freedom weighted. On the security level, we are taking the largest 10 most liquid stocks in each country that is represented and excluding state-owned enterprises, just to bring the economic freedom theme all the way through.
So you freedom weight and then you cap weight.
Cap weight within the freedom weighted country weights.
So you're talking about the difference between economic freedom and personal freedom. That's pretty interesting. I've never really kind of separated the two in my head, but there are countries out there that would score really high on one and really low on another.
Yeah, like Singapore. Singapore is it's like highest in the world on economic freedom, but it's like Disneyland with a death penalty, right? So it's
Can't even chew gum. What's that all
can't
about?
chew gum.
That's the best description I've ever heard of it.
Yeah, I didn't make that up. That's out there.
Say that description again, Perth. Say it again.
It's Disneyland with a death penalty.
So good. So good. Great chicken rice there in Singapore.
Okay. Yeah.
Perth, you know, one of the things that I was thinking about, you know, when I look at your fund and sort of the composition of it and everything like that, you know, Josh said it in the conference the other day because he was talking about, I think, the book that he just wrote. Morgan Housel said it when he wrote his book, like, this just needs to exist. Morgan Housel's like, I just have to get this book out there. It's, you know, this information I think is so important for investors. And sure enough, he sold 3 million books or 4 million. I don't even know. I lost count. A lot.
Yeah.
You know, Josh is like, I got to get this out there. You know, his new book, you know, what things you weren't supposed to see or something like that. Like, he's like, I've seen too much. I got to get it out there.
Yeah.
Perth, you said the exact same thing about your ETF. Like, you didn't just launch an ETF for the sake of launching an ETF or being like, oh, I want to run an ETF. That sounds cool. What should I do? No. You felt as though you needed to have this ETF out there. It needed to exist in the investing world. And your ETF is another great example, like Morgan Housel, a mutual friend of ours, that you just had to exist. You needed to make it happen. And here's all the success. I don't think that's a coincidence, Perth.
Yeah, I love that you remember that I said that. It's really hard to find something that you feel that way about. And, you know, having done it once and everyone's like, what are you going to do next? Like, you know, there's stuff we're considering doing next, obviously. But this is really hard to follow up on, you know.
I know, but Perth, nobody likes a one-hit wonder.
Okay.
You know, like, you don't want to be the Vanilla Ice of investing. Like, you don't want, like, you know, you got to give the people what they want. They want more. Okay. You know. I'm just kidding.
I mean, I'm not promising 2 hits. You know, I'm just saying we have stuff in the pipeline that we're thinking about doing. But it is very difficult to follow up on this. You know, like you said, it is a success in the indie ETF space, and you know, that's very rare. It's very rare to have something that you personally feel like, you know, has to exist and doesn't actually exist yet. Like, I have a lot of people coming to me with ETF ideas. Like, one of my, you know, best friends in Houston just came up with an idea that he told me about this weekend. And, you know, I looked it up, you know, with him on the phone, and there's already 15 of them out there. So, you know, and then he's like, oh crap. So, you know, it's very difficult to find something like this. And, you know, back in the day when we were doing this, nobody else was talking about ex-China. Now everybody has ex-China. And this is, I think one mutual fund observer writer put it the best when he was like, this is beyond ex-China. This is any stinking dictatorship.
It's ex-China, ex-India.
Yeah. So remember, this is an index fund. It's a systematic rules-based methodology. Yes, I created the methodology, but I have to follow it. So my personal opinion doesn't matter at all. I love India. I'm very bullish on it. I have been very bullish, and I've come out and said this publicly for years. But they fell out a couple years ago of the index. They're the most borderline country. So any year they can make it back in. The way our algorithm works is that if the score is above the average score, it's in. If it's below the average score, it's out. And so India is actually the most borderline.
Is China included in the average score?
It is included, yeah.
Got it. And what else? Like Iran and like some of these other extremes, or no?
Yeah, so Saudi Arabia, Egypt, Turkey, Qatar, UAE, those are the ones that are out. Russia has always been out. Now they're out of the benchmark as well. And I think that with all the ex-China funds out there, I think we should change our tagline to like, we were ex-China before it was cool or something. I don't know. But yeah, at the time that we did this, ex-China wasn't a thing. I think at the time that we launched in 2019, iShares ex-China, the one that you had up on your chart, was like 9 million or 19 million or something tiny like that. So now it's like, I don't know, 4-5 billion. I'm not sure. So yeah, it's now everybody has an ex-China fund. Sweden just came out and said that in their, pension, like government pensions, they've quietly sold all their China holdings. I mean, everyone's basically like has an ex-China. It's not even like a thing,
So
I don't have to say anything anymore.
So I think about this a lot, and it's come such a long way. There used to be like a 20 percentage point spread between China EM exposure and India EM exposure. That's almost gone to zero. Is there like a massive unwind coming? Have we finally seen peak ex China, or is this a trend that's going to go on and continue?
I think it's going to continue for a while. If it was anything else, like let's say this happened in India or Brazil or another country that's doesn't have the same problems that China has right now. These problems were decades in the making, then I would say, yeah, this is a great time to buy. But with China, and this is just not the place to look for the next value trade. And people have been saying this for years. Is it a great value buy right now in China for years? And I think that at this point, investors, large and small, are realizing that these problems in China are going to persist because they're so systemic and they're so just the product of the policies and the government interference in private markets, the government interference in private, personal lives, and just the lack of respect for human rights in general. If you don't treat your human capital right, if you have human capital destruction on a massive scale, the way that China's had, it's not something we can really recover from in our lifetimes. I'm not saying that China's stock market will not recover in our lifetimes. I'm just saying that there's some autocracy risk that persists in that market. And I think I wrote something in Barron's like 2020 into 2022 about this when they had these white paper protests. It was like after a building burned down because of the zero COVID policies and people couldn't get out. People in China had a protest, and you don't have protests in China, and so we were thinking, hey, this is a glimmer of hope. There's a protest in China, but then by the time my op-ed came out, the government was arresting people that were there, and they were just holding up blank pieces of paper, very reminiscent of what the Hong Kong protesters were doing after the national security law was passed. So yeah, there's the lack of transparency, very opaque ownership structures, opaque accounting standards. I don't know if you've ever thrown up a chart of MCHI, the MSCI China index, which is onshore and offshore shares. Literally negative returns for the last 40 years after a time of very real growth in China. And that real growth in China was due to the opening up of some economic freedoms, right? So it came from like unbelievably bad policies under Mao, where tens of hundreds of people, tens of millions of people died in a famine, and to not so bad policies, but not great, just not abysmal. And that incremental change in freedom, in economic freedom, and economic opening up, created a lot of, allow the people in China to create a lot of new wealth. And that was very exciting for a while, but foreign investors captured none of it over this time. And so not only are the freer countries the better place to find the best growth stories, but they're also the places where you can actually capture them in your returns as investors.
And they could keep growing, and then they could keep their money. I mean, you look at situations like Alibaba, some of these companies that do well, they become like state treasury. So I'm always thinking of like, what is the worst that could happen in situations like this? When Russia invaded Ukraine, I feel like from a market mechanic standpoint, it was pretty easy to zero them out of our lives and just say goodbye to all these Russian assets in everybody's brokerage account. Nothing systemic there. They're tiny. China, on the other hand, my whole career, I think there's been a very concerted effort by the powers that be, guys like MSCI, S&P Global. I remember the China Roadmap to Inclusion. This is a big thing. There are U.S. companies very invested in China being in our brokerage accounts, right?
Yeah.
Can we just zero them out if something goes wrong, or would there be some sort of systemic issue there? I think there's still a lot of U.S. dollars invested in these Chinese equities.
Yeah, I think there is, but there's a lot less than before. And if you had asked me this like 5 years ago, I've been like, there's no way we could decouple. Like that's just not possible.
Right.
But we've seen a lot of the decoupling. Like we've seen, the flows, capital flows, both private markets and public markets to China just absolutely like hit bottom in the last couple of years. And, news came out over the weekend that TSMC's Arizona plant is now making components for iPhones in the US.
Yeah.
So that's,
Right.
TSMC manufactures a lot in China historically, and now they've successfully are making iPhone components in the US. So this is not something that I thought would be possible a
Right.
few years ago. But I've been really surprised. And I don't know if you guys remember, but a few years ago in the emerging markets, if China did poorly, all of the emerging markets did poorly. It was like, the whole, China sneezes, everybody catches cold situation. But it hasn't been that way with this, starting with a drawdown in 2021 when China cracked down on tech and, Jack Ma disappeared. It hasn't affected other markets. As you can see, ex-China has done well in emerging markets. Freedom weighted has done well.
Yeah.
But freedom weighted obviously benefited from a lot of that too, because, as you said, Chile was great in the inflation trade. These are, Poland was great last year. Best performing market again, after it was also, in 2017. So, in a lot of these things,
I did have a question because MSCI has theirs, and FTSE has theirs, and everybody has a way that they measure what emerging markets are. Do you use one of those in particular, or do you just make your own rules?
We do make our own rules, but we are currently the same as MSCI's emerging markets universe, the starting universe. Now we take that starting universe, and we do the first step that we do is there's a minimum requirement for market cap and liquidity on the market level to be included. So that's like, it eliminates like 6 countries off the bat. So these are countries that are too small or too illiquid. So there's countries like Czech Republic, which is in the MSCI universe, that we don't put in our eligible universe. So we start with the same starting universe, but then we have an eligible universe. And the eligible universe, you have to have a certain liquidity and market cap. So Peru, big enough, but not liquid enough. So there's some very free countries that we don't include because we want the fund to be tradable for investors. And there's smaller unfree countries like Egypt that are not included because of size as well. And then the remaining countries, that's what we freedom weight.
That's really interesting because I think about it a lot. I did have one chart that I wanted to share before we let you run. Can you throw up slide 2, Spencer? I'm just so fascinated by this one here. This is the performance of India.
Oh my God, yeah.
Why I'm looking forward to maybe India making the cut for this ETF, because this is the performance of India and China this century.
I saw that this weekend. Somebody tweeted this weekend.
Really? Well, tell me who that somebody is, because
I
we
will.
can be friends.
No, you will. They tagged me on it. They tagged Jake on it.
They tagged me on it?
No.
Oh.
But they should. I mean, you should tweet this because this is incredible. And I think
I'll tweet the shit out of this one.
Yeah. Yeah. I mean, India, if you look at their population too, they've overcome China in population. And a lot of this is self-inflicted by China, right? So the one-child policy, I was born in China during the one-child policy, the first year of the one-child policy. I'm very old. And the one child policy led to 30 missing women in my generation. You can't recover from that in our lifetimes. That's human capital destruction on a massive scale. And so now our population, the Chinese population is below India's population, and population is, demographics are destiny in emerging markets. So yeah, I'm very bullish on India, and I do hope to see it re-included. It was included a few years ago, but then they had like these, they blacked out the internet in places that had protests. They increased repression on their Kashmir people. They had increased media interference by the government, like Modi raided the BBC office and things like that. There's a, possible extrajudicial killing in Canada and all of these things. So we do look at, personal freedom as well. They are kind of protectionist in their trade policies on the economic freedom side, but they've always been that way, and they still, that's not what caused them to.
How often are you reevaluating?
Once a year. So the next rebalance
is
in once a year. So the next rebalance is in January.
Come on, India, get your shit together. Let's go.
Yeah.
I noticed that FRDM pays a higher dividend yield than its peers. Is there any real reason for that, or does that kind of like vary and go back and forth?
It may just be because of the securities we include are not the state-owned.
A lot of banks, a lot of financials.
Chile.
Yeah.
All right.
I have no other
Perth.
explanation for that. Yeah.
Good seeing you in California. I wish you got to hang out more. There was too many people there.
Next year.
I'm just grateful I got to see you in Strazza at all, and that was like totally by accident.
It was random.
And I got to see Josh the same way. So, I didn't see Barry at all. I'm just grateful to be able to have seen anyone, and it was fun. I think I ran into you twice, JC.
I was complaining because it was so big this year. There were a number of people that I just expected to see, and we never like bumped into each other. You have to like make an actual effort to like find friends. It's so big.
Did you sign up for the meetings as well? Because like those meetings, man, I had too many meetings.
I can't go under that tent. The noise, noise does something to me. They like soundproof it, and like you go under this tent, and it's like this like slow roar. I can't. I have anxiety.
I think next year I'm not going to sign up. I'm going to do the JC way. I'm not going to sign up for meetings because you gotta just organically run into.
You have enough meetings. Just stand by the stairs in the middle and just hang out there.
Exactly.
We signed up and did meetings like 2 years ago, and everybody was just asking for a job. It really wasn't beneficial. So.
Oh, okay.
That sounds right.
I can see that happening with you guys.
Perth, thank you so much. Keep up the good work. We're rooting for you.
All right.
Let me know when the next one's coming out. The next album, the new joint. We'll get you on.
All right.
See you
Bye,
later.
guys.
She's great.
There were too many people at that conference.
I agree.
They were like that band we used to go watch in the West Village, and now they're selling out, stadiums, and we can't even get a ticket. Like that's how it is now.
JC can't even stay at the conference hotels because I can't imagine going back to your room.
Beach, which
you
ended up being pretty good actually. I kind of like.
Following you to your hotel room,
huh?
I said you don't even stay at the conference hotels. You where like people follow you back to your hotel room at night. It's just like
I don't care about that. I would have. All
right, Peter.
I couldn't get a room.
No, listen, I think they have to cap it. Like really, for it to stay good, I think you got to cap it somewhere. It can't get any bigger. But what a great problem to have. And Peter Segura in the chat, if somebody doesn't say something about Constellation Energy, I think he's going to have a heart attack out here. Can somebody mention what happened with Constellation Energy? It was up 22% the other day. Big news. This is an AI stock. How exciting!
Up another 4% today.
Yeah, that's actually accurate. This is now an AI stock, right?
Tell me why. School me, please.
Wait, when was this? Was this Friday morning, Thursday night, Friday morning, something like that, right? They announced a deal with Microsoft, right? Basically, Microsoft was like, they're looking around, they're like, shit, how do we power all these AI servers we need? Oh, I know, nuclear, and that's what they're doing. So they partner with Constellation Energy, and they're basically going to turn 3 Mile Island back on. Yeah, that's exciting for you, JC. It's not far from your neck of the woods.
Nobody goes there. It's like in Harrisburg. Have you ever been to Harrisburg?
No.
Don't. Yeah, nobody goes there.
So after the gist of it, it's a 20-year, I think it's a 20-year deal. Yeah, 20-year agreement.
Isn't it amazing that this scary, dirty, dangerous energy source is now being partnered and joining in the AI party with this new technology, right? All of the documentaries on HBO would tell you nuclear is dead. I mean, you can't touch this stuff. It's so dangerous. It's terrible.
Dude, the
Now-
documentaries you want to watch are not on HBO. They're
This
on
is
YouTube.
first of all, no, HBO does a great job with documentaries.
No, they're good.
Do they? All right.
Yeah.
Did you watch the David Chase documentary yet? It's excellent. You would both really like it. Spencer, it takes
David
place.
Chase?
I can't. I haven't seen Sopranos.
Person?
God, Jesus.
Is that P. Diddy's bodyguard?
No.
Listen, it's too soon for the Diddy jokes. I was golfing yesterday. The Diddy jokes, they're not stopping. I'm not ready for it. I'm not ready for it.
800 dildos. The jokes write themselves.
Okay.
Listen, I can't. I'm not
800.
ready for it.
All right.
I'm not paying attention to
800.
the news. Rose keeps updating me. I'm like,
That's almost 1,000 dildos. That's a lot.
do you think they were the Shark Ninja dildos and that's why the stock looks so good?
They don't make dildos. They make vibrators, Strazza.
Oh, fuck. Sorry.
Nice try, though. Good attempt. Good attempt.
Diddy's putting a bid in Johnson & Johnson stock, buying all that baby oil.
He is. He's true. It's true. That is something, man. That is really something. Spencer, what else is going on here?
Do we have
you
that
investing in prisons?
What? No. Do we have that Intel chart? Intel all of a sudden has like several suitors, right? There was a report last week that maybe Qualcomm was sniffing around, and then there was a report this morning that Apollo's taking a stake. So
How sad for these guys. It's over. It's over. Wow. That's crazy.
It's kind of
mean-
been over, hasn't it?
Yeah, but like it's still surprising. It's still shocking. It's like when GE finally like had to split and like everything fell apart. Like these are the guys. These were like number one, first place. How could you lose? They made all the chips. Anything important that was in anything important, Intel made. It was just 20 years ago. How could you blow such a big lead so quickly? I mean, this is one of those like Boeing's the same way. That article, that like the Journal of Science or whatever, Boeing's going to be the first in space. How could it be anybody else? I mean, just pay attention. These things happen really, really slowly and then all at once. I mean, like you said, JC, the writing's been on the wall for a decade now, but it's still like amazing that they have been this bad for this long.
Yeah, it's pretty impressive, really.
Yeah.
Yeah.
Qualcomm buying Intel. People would have laughed. If you said that 5-10 years ago, Qualcomm's going to buy Intel. What?
yeah.
Intel.
We've got a little hot corner action as well.
Hot corner.
$1.8 million insider buy Credit Acceptance Corporation.
The CAC?
The CAC.
The CAC 40?
Not the CAC 40.
Not the CAC.
This is CAC with 2 C's versus the French CAC that only has 1 C. You don't think that's impressive? These credit services stocks keep coming up again and again and again. PayPal making moves. Can we throw that up? Can we do a little hot corner?
Talk about it. We're going to do a special report on the Baker Bros later in the week. Because the biotech's just so hot.
Ooh.
Talk dirty to me, Steve. All right.
Deep dive and go through all their holdings, right? Talk about the history,
Keep your clothes on, Spencer. Keep your clothes on. All right. Just
So hot right now.
So what do you think? Are you impressed by this, Strazza, or no?
Throw up the table. Hot corner. Here we go. The APPN is old news, right? Like we're ready to just like stop including this one on the table. These guys have just been buyers for like 2 straight years now. Casey's General Store stands out. Somebody was telling me that when directors buy, it doesn't matter because they have to buy stock. When we're out in Chicago, that's really not the case. They get paid in stock, right? And they're supposed to have some skin in the game, but they don't have to go out and buy $100,000 worth of shares here and there. So this one stands out. Casey's General has been so good for so long.
Yeah.
Then JC, you're right. The CAC, while I don't love the chart, that's really the biggest one that we have here today. And then with the 13 Gs, we get the original filing and it says, okay, they own 2.75%. And then we get amended filings from there. And if it's just small increases, sometimes it's dividends being reinvested and stuff like that. We don't want to pay too much attention to it. But they took this pollution company, Pure Cycle Technologies, from 2 3/4 to over 8%. That's a massive increase, right? Almost 3x their investment. So that one really stands out from an amended 13G perspective. We could throw up the Casey's chart because this.
Spencer, have you ever been to a Casey's General Store? Do they have those?
I've never seen one.
I've seen them. I've never been to one. Where did I see it? In Ohio? Maybe Ohio. I saw one.
Strazza's never been because this was his first trip to the Midwest.
Yeah.
Pharmacies?
No, it's a general store.
It's a bodega. It's a bodega for the Midwest.
Yeah, it's a
What is
convenience
general
store.
store?
It's like Wawa. It's like Wawa. Like a
In the
7-Eleven?
Midwest, they have these. They don't call them bodegas. They call them general stores.
7-Eleven.
Bodega and general store are the same
But
thing?
more, it's a little more than that. But
General stores are bigger because bodegas got to fit in this like 10 by 10 room in New York City.
Okay.
But they have the same amount of shit in both.
I love me a good corner store.
Yeah. You'd like Casey. I've never been to one, but it sounds like a place that I would like. You know, I can get a sandwich, maybe get a coffee, some chapstick,
Great.
some hand sanitizer. I don't know.
Love it. Some Old Spice, whatever you need.
Yeah, whatever you need.
Pretty much.
Razors.
Yeah.
They're still talking about CEG. All right, that's it for Hot Corner, guys. Did we touch on all the news, Spencer? Because we were out last week. Like any big
What
stuff
happened? What else are we missing?
I mean, as far as news, I can tell you like what I read last week. I read a number of good like long form articles. There was a great one about Nike in the Journal about just kind of how Nike became uncool. Nike, of course, replaced their CEO last week, so the stock had a great day. What was that, Thursday? I think.
Haven't I been saying that, guys? Like the retail situation is so hard. Nike's not even cool anymore. I've been saying this for a year now, out on the golf course. Like if you're wearing Nike, you're a loser now. I still love Nike. I still rock Nike. Same with Under Armour. Like nobody's doing that. It's very strange. When we were kids, it was very different. There was Nike and everything else. Now there's everything else. And like, dude, you still wearing Nikes? Like it's the polar opposite of what it was.
There was lots of reasons to blame for Nike's performance recently, but one of them is the fact that their strategy was basically at the encouragement of Wall Street to increase the online direct to consumer sales. So that's great, but in order to do that, they had to basically cut their inventory at a bunch of major retailers. Foot Locker was the biggest one, right? So what is Foot Locker and all these stores, what do? They have all this empty shelf space. They used to have Nikes there, now they don't. What do? They bring in other shoes, right? Yeah. Hello, New Balance. Hello, On. Hello, whatever, right?
Now people who otherwise wouldn't know these other brands find out about them.
Right. And now all of a sudden, you've got, these smaller shoe brands which have seen a resurgence and Nike has not. So they kind of cannibalize themselves. Yeah, the e-commerce thing, the direct-to-consumer, that really went up and to the right, but it came at the expense of the stores, right? So it was interesting. It was a good article, but they've got some work to do. So Nike was last week. FedEx was last week. Tough day for FedEx. Was it Thursday or Friday? On their report, a lot of that was I think guidance from them, but yeah, those are kind of the big stories from the week. Nike and FedEx,
and one
new all-time highs and On.
One Hill is right. Like I want to wear Nikes so bad. I try to keep buying them and I try to keep liking them. The quality has gone down so much. I bought new shoes last night because I'm walking all around Chicago in shoes that I've had for too long now. I bought Travis Matthews shoes. They're lightweight. They're breathable. They're beautiful. They look fantastic. You wear them on an airplane. They're so comfortable. You walk around town in them. They're great. The knit shoes, like they're so breathable. I like my feet sweat a lot, right? You got these big clunky Nikes on. I can't do it. I just can't do it anymore. So I'm really disappointed and sad about Nike as well.
I really couldn't care less. Can you throw on the On? I just bought myself new tennis shoes.
You went with the On? Nice, dude. See,
yeah, because I figured Federer.
You're a trend follower. You're a trend follower. I like it.
Well, I needed tennis shoes, and I don't know any other companies that make tennis shoes. I see Roger Federer being like the spokesperson for On, and we talk about the stock, and it's making new 52-week highs. So, and my wife loves. She's on her second pair. I'm now on my second pair, and I getting a lot of compliments on my on tennis shoes. My tennis instructor said those are going to be good. They're going to make me a better tennis player.
Wow.
He didn't say that. He didn't say that. But in my head, that's what it is.
That's how I think when I buy new golf shoes.
Yeah.
I'm like 70s, baby.
So that expensive putter, are you still a shitty putter, or how does that work?
I was so frustrated yesterday.
That sounds right.
I 3-putted away a handful of pars and birdies yesterday.
Well,
but I was
it makes
tracking.
you feel any better. I'm known back in the old West as 3 putts Parets.
Think about it. After our week, last week, I get in Saturday night at like 10 o'clock. I go straight to bed, and I'm up at 6:30 to play 18. I mean, come on.
That's unnecessary.
Yeah.
No one made you do that.
Well, I agree. Well, once you agree, if you agree, like you can't do that to the group, right? Like you can't screw the group. So if you say yes, you got to show up.
Spencer, you can't screw the group.
You got to show up.
All right. There was one more thing. Oh yeah. As far as news from last week, the release of the latest iPhone. One Sean McLaughlin took it upon himself to do some channel checks. He went to the Apple Store in Chicago. He said it was not super crowded.
Yes, it was. It was a disaster.
Oh, it was?
I couldn't get any help.
Oh,
I had to walk out.
my mistake.
Next morning. Yeah, the lines were insane.
Okay.
You know anybody who has one?
No.
Yeah, Jason had to get a new phone on Thursday because his phone broke. So he got one.
Jason Purse?
No, Harmon in Chicago.
So he's got the AI?
No, the AI is not out yet.
Oh,
the AI stuff is going to come like in like an update later on.
I'm not. Then why would anybody get the new phone now? Why not wait for the
Because
AI?
the update can't go on the old phones.
We're gonna ask.
Got it. Okay.
Like you buy a Tesla, even though they're not self-driving, one day they're going to be able to press a button and they're all going to be self-driving.
How about this, Steve?
They already have it built in.
To answer your question, we're gonna have Dan Ives on the show on Thursday.
Hell yes.
We'll just ask Dan.
And I had some good conversations over in California.
Dan's awesome. So are we going to have the guy on with the music ETF? I had such a nice conversation with him.
Yeah, that's tomorrow.
Music ETF.
Yeah, the MUSQ. I mean, this is like a secular trend. Streaming. It's really interesting. We're
What kind of companies are in it other than Spotify?
A lot of big tech.
Streaming companies. There
are a lot of big tech.
There's a lot. I mean, it's Tencent, it's Spotify, right? It's the big boys.
Apple.
But there's some smaller stuff overseas.
Yeah.
Whole fund for music. So that'll be an interesting conversation. You meet people like this at places like that. The biggest news last week for me, IBIT options, green light. Let's go.
Yeah.
Let's go. Let's get involved.
Friday night. Right?
Yeah. So IBIT finally got the approval to list some options.
No, that's very exciting. It's about freaking time. Come on, U.S. government, get your shit together. It should not take this long. It's 2024. Come on, guys. Right? Am I wrong? Are we going to split hairs here?
For what? For what now?
It took them too long to get these options.
Yeah, ridiculous. Absolutely. I mean, they continue to just screw these guys. But look, Bitcoin keeps working. So interesting.
And then the only other headline was something about a rate decision. I don't know. I didn't really look into it that much.
Yeah, spicy double. Everybody knows about it.
Oh my God, I can't believe it. The Federal Reserve did what the bond market told it to do. Oh my God, I can't believe it.
I think you get another 100 basis points by year end. Maybe 150 even.
In case you didn't know, the Fed follows the 2-year yield. So just follow the 2-year yield. Now you don't got to listen to these old white guys telling people to close the fucking door and whatnot. You know what I mean?
It was interesting listening to Gunlock talk about that. We've listened to him the last 2 years. He's been pretty much 100% wrong about everything he said. So maybe
dude, he's like, you got to sell stocks because stocks are going down. We're already in a recession, but you can't buy bonds either. So you got to sell bonds. You got to sell stocks, sell bonds. We're already in a recession, and you can't hide in the U.S. dollar either. So you're just fucked no matter what you do.
Yeah, but do you think he feels dumb? Like he said we were in a recession, and then he probably walked off the stage and saw the roller skate girls and was like, shit, missed that one. Right?
All right. Let's do some recess.
Roller skate girls. If you were asking God to give you a sign, the sign was given to you in Massachusetts over the weekend. If you want to throw up that slide too, Bulls on Parade. To quote the great Rage Against the Machine, great song. I'm not even one of these like hair metal, like just crazy white guys screaming. I'm not one of those guys, but I can get down with some Bulls on Parade. When we get off this, I'm gonna go for a run. I'm gonna listen to Bulls on Parade. Commemorating the bull market, 2 years and change into the bull market, and clearly the Bulls raging on in Massachusetts, escaping from the rodeo.
Wait. But stop. Didn't this happen when the Dow broke out to all-time highs also?
There was one bull, and
In
it
New
was in the Newark Penn train terminal.
Yes.
So this just happened again, though?
Yeah, this happened, and it ran through the fence like resistance, right? The bull's just running through resistance and just opening up the floodgates, right? And then just all the bulls following along.
Why do they keep letting the bulls on the train?
They can't stop the bulls. That's the whole point of bull markets, right? Like no matter what they do, no matter how much gloom and doom and scary things about like, this big event that's coming and how you got to sell stock, right?
So
No matter what they say, they cannot stop the bulls. That's what happens in bull markets. And as soon as those bulls ran through that fence, broke down that resistance, off the races.
So there's apparently throw up my thing. This is too funny that you're bringing this up. I didn't even know about this. So there's apparently a special edition teddy bear that the New Jersey Transit made, but it's a teddy bull, right? So I woke up Saturday morning. I walked out of my hotel room. There was a tiny little Lululemon bag sitting for me when I opened my hotel room. I had a note and a teddy bull. And I couldn't help but think to myself, what part of the cycle is it when your friends are gifting you stuffed animal bulls and talking about the bull market? Nice little note explaining the story about the first day that the Dow reclaimed those prior cycle highs. A bull was running wild on the New Jersey train tracks. And now, what do you know? It's happening again. What a world.
Wow. Okay.
One more thing, Spencer. I want to get to, I just dropped the link. If you guys can share the link and throw up slide 2. We got a great invitation to go to the Pat Tillman Foundation.
American hero.
In Chicago. Who knew that the Pat Tillman Foundation is in Chicago? This is a NFL professional football player who left the league, went to go, protect our country abroad, lost his life. And his wife, his widow, lives in Chicago, so that's where the Pat Tillman Foundation is headquartered. So we got a nice little tour. It was actually really impressive. The guy who runs it is a 25-year veteran S&P futures trader because Chicago, and that was a really cool experience. So this is us at the Pat Tillman Foundation in Chicago last week. If you could drop the link, Spencer, I see you did that. Go check out what they're doing. It's actually really, really cool. They're taking like veterans, but like the most elite veterans that are getting into some of the top schools, and they're paying for all of their stuff. And these are people in higher education, in entrepreneurs, technology. I mean, these guys are crushing it. So what they're doing is really, really cool.
That's cool. I was bummed. I landed like a little bit too late to make this, which is a bummer for me because I'm willing to bet that I'm the only person that was in our group that actually has a Pat Tillman jersey. I was bummed I didn't get to be there.
Next time you're in Chicago, which I'm sure will be, it can't be too far. Next time we're in Chicago,
Yeah.
Let's go.
Anyway, and also Matt will be on the show coming up shortly.
Oh, nice.
Well, so
great.
This week, I think.
Amazing.
So, anyway, a lot. We had a great week. Obviously, a lot going on. Chicago was fantastic. It was just want to say shout out to JC for that Cubs game idea, which was wonderful. It was great to meet a few of you. Were cool. I don't know who you are in the chat, AIH Sports, but you were there as well. So it's great to meet some fans, some clients, some friends, and it was probably the most fun I've ever had at a baseball game in my life.
Wow.
So just wanted to say shout out to, if you ever get the chance to go, and you have to go soon because someone on Twitter told me that the rooftops are being torn down. I guess they're building condos or something. I don't know. But anyway,
amazing.
That's what I had to say. Was the Cubs game and the rooftop was chef's kiss.
And it's something that I've wanted to do like practically my entire life. Exceeded expectations. It's a lot bigger than I thought. Like a lot bigger.
Huge. Yeah.
It's cool.
Also, I watched a documentary last week. The Movie Pass doc on HBO. Movie Pass, Movie Crash. If you remember our old friend Helios and Matheson, HMNY, and that whole thing. It was very good, very well done. It's pretty quick. It's like an hour, 20 minutes.
Well done documentary by HBO. I hear you.
Yeah, and it's just one long doc. I'm very over the
This is a
episodic
doc-series?
docs, man. I don't need episodes. Just give me one shot, and I'll bang it out when I want, as I can. But movie crash on HBO. That's what we got today. It's Monday. We're back. We got the Flow Show, right, Steve? You and Sean coming on at 11:30 a.m. Eastern time to put on an options trade, and that's all we have for us today. So thank you very much to Kenny Glick. Thanks to Perth Tolle. Thanks to all of you in the chat for hanging out. Do me a quick favor. Hit the like button, please. I would appreciate that. It does help us on YouTube. And we'll be back tomorrow. How's it going, guys?
YOLO responsibly. Adios.
I can't take no loss.